Hi, everybody. This is George Foshin, Call Realty Best Palos Verdes Homes, and it is May 1st, 2020, and it's the month-end real estate update for Palos Verdes areas and the South Bay. One of the things that I was confused about until I dug a little bit deeper and I figured out what was going on, and actually it's my fault. It's the way I keep records. I've been keeping records on the numbers back to 1991, so I've got a lot of data. And one of the things that I was observing was that in some of the areas, the number of days of unsold inventory was actually improving quite a bit, even during this time. Now, look at this. For the Palos Verdes Peninsula, in the time period of November 1, 2018 through April 30th, 2019, that's last year, right? There was 300 days of unsold inventory. That statistic answers the question at the pace that properties are selling, how long would it take to sell existing levels of inventory? That's really important, more important than average days on market, which frankly is a useless statistic, because this metric really gives you what the market is doing in terms of its ability to absorb inventory through sale activity. And that's what matters. And we want to keep track of those trends because whenever we're pricing homes, we're always pricing within a range. There's no way any appraiser, real estate agent, real estate broker, seller, buyer, no one can say with any scientific certainty, this house is worth $1,345,678.19. You can't do it. Real estate, as much as it is a commodity, its price affected solely by demand and supply trends. It's not like gold, silver, live cattle futures, where thousands of contracts are bought and sold on a daily basis to the point where you know with certainty down to the penny what an ounce of gold is worth on any given day. And not only are ounces of gold traded in huge volumes, but each ounce of gold is identical to the next ounce of gold. Not so with a single family residence. So we want to keep track of this so that we can understand where we price properties in the range. If the trend is to higher numbers of unsold inventory, then we want to price more in the lower part of the range. If it's the opposite, we want to price maybe a little bit more on the higher side of the range, all other things being equal. So I was looking at the numbers and seeing, wait a minute, we're dealing with a COVID-19 world. How is it that these numbers are decreasing so significantly? Well, in some areas, Rolling Hills Estates jumped from 224 days to 248 days. But for the most part, there's been a decrease in the number of days of unsold inventory. Well, there's a couple of reasons for that. Number one, the balance of supply and demand is such that there are fewer properties being listed, so that kind of helps this dynamic of demand and absorption. But let's go back to this other chart, this first chart that I'm showing. It's really important, and I know we're getting kind of wonky here, but it's really important to understand. Now, what's going on here is the blue. The blue section is all of the South Bay. The red is just Palos Verdes Estates. Now, I calculate this ratio a little differently than these charts. These charts look at just numbers of properties listed as a supply section. This chart goes a little bit broader in terms of defining supply. Supply in these charts are not only new listings, but price reductions are counted as an additional piece of inventory because it's almost like a new thing coming to the market. It's a new price, same property, but it's a new price. And I'm counting failed sales, properties that were in escrow that come back on the market, I'm counting them as an additional component of supply. So when we accurately look at supply that way, then the numbers start making a little bit of sense. Even so, it's interesting to see for the South Bay, the numbers actually have improved in March and April versus the 6 months prior. Look at that. 80% versus 66% in November 19 through April 2020. And for the 2-month period of time, the ratio was 80%. Again, I think this is in large part because demand has held steady, but inventory has decreased. That's not the case for Palos Verdes Estates, unfortunately. In the March and April time period, the ratio was an abysmal 23%, whereas for the 6-month period of November 2019 through April 2020, it was a strong 57%. I haven't seen this low of a number since 2009, when we were dealing with the economic collapse of the banking and lending businesses. So, interesting. If you're in Palos Verdes Estates and you're going to be selling your property, you've got to price the property in the lower part of the reasonable range. You just have to, or else you're going to sit. There's a lot of properties that are just sitting and not selling because of that very thing. You can go further down to look at the actual tables. Let's use the Palos Verdes Peninsula, the entire PV Peninsula. That's the Palos Verdes Estates, Rolling Hills Estates, Rolling Hills, Rancho Palos Verdes, and the unincorporated area called Palos Verdes Peninsula off of PV Drive North, Eastvale, Westvale up in there. So let's look at the same 6-month periods of time. So we're taking out the seasonality component. So same 6-month period of time, and this is the 6-month period of time just before the current 6-month period of time. And let's study what's going on. Percent change of listing volume. This is new listings coming to the market. Inventory down 22%, like I was indicating a minute or two ago. Demand was down too. Well, not surprising. Again, we're dealing with a COVID-19 world, but demand hasn't dropped really that much. And relative to new listing volume, that's dropped a whole bunch. That's why the absorption rate has actually improved for the Palos Verdes Peninsula. So kind of interesting, dealing with 300 days of unsold inventory here to only 251 days in the current period. So I think very, very interesting. And you can dig deeper into the other sections of Palos Verdes there. Last 2 thoughts. I know this video is running a little bit long, but there's a lot to talk about. I don't know if you're aware, even if you're just casually browsing without any intent of buying or selling in the near future, you're just casually browsing because you're at home and you're done reading 25 books and you want to just check out real estate. Most people are not aware of this. Big sites like Zillow, Realtor.com, Redfin, Trulia, Movoto. I mean, there's a bunch of public portals out there. They're free. But like Milton Friedman said, there's no such thing as a free lunch. What's happening is that these companies make their money by the number of clicks they get on their site, because the click rate and the click volume determines the cost of advertising that they charge various real estate affiliate type businesses. And what they do is that they collect your search pattern, how often you search, what you search, who you are, your email address, your phone number, all that data, and they sell that to multiple real estate agents and multiple advertisers. Have you wondered why the number of spam calls and spam emails have increased? If you've been on Zillow and some of these other sites, that's why. So don't use those. If you want to search privately, go to searchhomesinprivate.com. It'll take you to this site right here. Or if you're being directed from the comment section in this video, and you get to this particular page, just click here. And you might have interest too, in, even if you're just curious, on how many buyers are now searching for a home like yours. And if you're thinking of selling, how valuable would that information be? All right, long video. I'm done. If you have any questions, just get a hold of me. You can use this button down here, schedule time with me by Calendly, and we can schedule a Zoom conference where you can ask questions from the comfort of your own home. I can demonstrate answers, and we can discuss things. Or you can email me from this button up here. You can interact with one of my artificial intelligence bots. You should try asking a couple of questions. It's kind of fun, actually. Okay. I'll talk to you soon.